welcome back to another installment of Mortgage Talk with Nitza and Jess. I am Danitza Nicklow, Realtor with Berkshire Hathaway, the preferred realty in Pittsburgh. And this is Jessica Lyons with Lyonsgate Funding. Hi, Jess.
Hey, everybody. How are you?
We're good. So today I would like to talk with you about appraisals. Just tell us on your side what they are, what they do, why we're needed, and, give us the down and dirty on them, I guess.
Okay, sounds good. Well, the reason why we need an appraisal, Danitza, is basically from the investor side of it, they're never going to come out and see the property, right? So the only time they actually have somebody there that's representing their interests is through the appraisal. So a lot of things changed many years ago after the whole market crashed on how appraisals could be ordered. A lot of times customers will say, hey, can I just order my own appraisal? I know somebody. And unfortunately, as you know, that's not okay.
Yeah.
I can't even order my own appraisal with someone that I know, and I know a lot of people in the industry. It's just from the investor side, they want to make sure that it's a non-influenced third party that's coming out there that has nothing to gain from the value of the property.
Okay.
So when we order appraisals on our end, as you guys know, I'm a mortgage broker, so I work with a lot of different banks, and all the different banks have different AMCs that they use, which are their third party orderer. So whenever we get the loan in, we go in, we submit the order to the AMC, and then the AMC will go out and find the appraiser that they want to use for that property. So each AMC has different charges. We typically see on a conventional anywhere from about 500 to as much as 600 for a normal single family Fannie Mae, Freddie Mac type of appraisal. Now, when you do an FHA appraisal, those are a little bit more expensive, as well as the VA. FHA typically for an appraisal, it's usually going to be $550 to about $650. And then the VA, that's set by the Veterans Department, and they are at $625 currently for an appraisal. So each place is going to have different prices, and once you get your loan into process, we'll say, okay, hey, with this lender, this is how much the appraisal costs. But what they're doing is they're hiring this appraiser to go out and look at the property. So they're looking at a few different things, right? The first thing, obviously, that they really care the most about is the house truly worth what you're buying it for? That is their number one question.
Yes.
So what the appraiser's job is, they go out, they inspect the house, make sure that there's no issues. Like, for example, over the winter time when we had that really bad freezing weather back around Christmas, there were a lot of houses that unfortunately were sitting vacant, and during that time their pipes froze. So the appraisers went out there and they found houses with water everywhere. Mold, there could be tremendous damage. So in addition to making sure that the house is worth what they're buying it for, they're making sure that there's no issues with the property itself. Some of the things that they look for on the appraisal would be cracks in the foundation. And also, depending on what type of appraisal you're having done, if it's an appraisal for a government loan, they're going to be a little bit more stringent on certain things. Like, they want to make sure that safety is a major issue for them. So if there's steps that don't have railings that are over a certain height, they're going to require that railings are installed in order to make sure that nobody would fall or get hurt on the property. The other thing with like FHA and VA, they're looking for GFIs in the bathrooms, the kitchens, any area where there's
Peeling paint is a big one for government loans.
It is.
One, I've had multiple clients, have to come in and paint a porch or the foundation in the basement, because those places that may not necessarily be top priority because everyone realizes, we'll get to it eventually. The appraisers are definitely watching out.
Yes, yeah. With the VA and the FHA, they are going to call out peeling paint. The reason for that, it's a safety issue. Once again, essentially, they're just thinking most of these houses are old. There could be lead in the paint. They don't want anybody eating the paint. So it sounds crazy to believe in this day and age that we're worrying about that, but we're talking about the government here. So
to be honest, though, I think you and I understand lead-based paint, know it, but it has been gone long enough that, younger home buyers have never had to think or deal with it. So it is an issue that I've had to educate lots of people on. So I do think it's a good idea for those appraisers to be, careful about it for certain people.
yeah, no, agreed, because the last thing we want is somebody to have any issues with it. And it is possible. So yeah, with the government loans, that's like the main thing. They're looking for the safety issues. But once again, it all goes back to, at the end of the day, the value of the appraisal and what the house is worth. That is truly their main concern, because they don't want to lend you 96.5% on a house that's not worth what you're purchasing it for, which makes complete sense from their standpoint, right? So when the appraiser goes out, he is going to go in, he's going to take some pictures of the interior. He'll take pictures inside the attic. He will also take pictures from outside, front and back, from the street. And then what he'll also do is a sketch of the blueprint of the house. So he's going to draw a sketch with the dimensions and everything, and that goes in the appraisal as well. So the investors can kind of see it. They'll be able to see what the square footage of the house is and everything like that. So once he's done that part and he's there at the house and he takes his pictures, he does his drawings, he's going to go out while he's in that area and he's going to go look for houses that have sold within the last 6 months, typically. Sometimes they'll make an exception if there hasn't been anything that's sold recently. But he's looking for properties that have sold within the last 6 months that are similar in size and style. And then what he does is he'll make adjustments depending on the comps. So for example, let's just say one of the comps he looks at has a finished basement, but the house that you're buying doesn't. He's going to give an adjustment for the finished basement. If you have a 2-car garage and the house that's comp only has a 1-car, there will be an adjustment for that. So what they do is they try to go in and make it so it's apples to apples when they're looking at the cost. And so sometimes if the sales are a little bit further out, they'll add a listing in that area so they can kind of get an idea to gauge where the current market price is for that specific neighborhood. But that's really what the appraiser's job is to do, is make sure that the house is worth what you're buying it for, that there's no major issues with the property. And then, like as we spoke about with the government loans, that there's none of these safety issues that FHA or VA would have an issue with. So if it does turn out that there is a safety issue, what would happen would be they will make the report contingent upon the work being completed, right? So as you talked about, if the people need to go out and paint, they're going to have to get that done more than likely before they can close on the house. Now, sometimes if it's winter time and you can't paint, sometimes we can get an exception for that. But for the most part, they're going to want anything that the appraiser calls out on the report finished prior to getting your loan. So just keep that in mind and know. And unfortunately, as you guys all know, there's a cost to everything in life. So when they come out to do the final inspection, there is another cost that goes to the buyer for that final inspection. So it's typically somewhere between like $125 to $175, just depending on the appraiser and the AMC.
So basically, it kind of sounds like to talk about related to cars, which most people deal with much more often than buying or selling a house. It's like the Kelley Blue Book for houses of sorts, that an investor, a bank, is going to have an appraiser go out, whereas you as the shopper for a car are going to go to Kelley Blue Book and find, this 93 Chevy's worth $500. So yeah, I'll pay you $250 for it.
Yeah, that's a great equation. I mean, it really is very, very similar. And so, yeah, it's, everybody, and from the standpoint of the buyers, you want to make sure that you're buying a house and you're paying what it's worth. It's been a crazy market over the
Oh
last
yeah.
several years. And right now it's a little calmer, but a lot of people were paying a lot more money than what the houses were listed at. So from your end, you want to make sure that you're getting the right price for the house as well. And so there's really no one better than an appraiser to give us that accurate idea on what they feel a house is worth. Um, but you're right. I think it's a good equation. It is very similar to the Kelly Blue Book. I wish it were that simple though, Denise, so we could
Yeah.
just pull up a book and say, oh yeah, my house is worth this. It would make all of our lives much easier in the
It
industry.
would, save everybody thousands of dollars, but there we are putting lots of people out of work. So let's not do
Yeah,
that.
you're right. You're right. It would put a lot of people out of work. So yeah, no, it's good to have an appraisal done. And sometimes, just like as we're talking about appraisals, there are times where you might not need an appraisal if you're doing a conventional style loan like FA or sorry, not FHA, but a Fannie or Freddie loan. There are times where it might come back and say, hey, you know what? You are a strong enough borrower. We had a report on this house not that long ago. We don't need another appraisal done because probably, I don't know, like I'd say probably 5 or 6 years ago, they started tracking the Fannie and Freddie appraisals. FHA have been tracked for a very long time, but with Fannie and Freddie, all that appraisal information is put into this portal. And whenever we run the automated findings, it'll come up and it'll say, like, hey, you know what? This person, we accept this value that you put in here for the purchase price. They're a strong buyer. We don't need to have an appraisal done. And if that's the case, then you save the money for the appraisal. And honestly, those really only come up in situations where appraisals have been done pretty recently on the property. They have a really good idea of what the value is.
Well, that's good to know that some people get, a little bit of savings and, $600 and $700. That's a new fridge, a new stove, possibly. So, awesome for those people.
Yeah, no, definitely. Any money you can save is good.
Of course. Well, thank you very much for all of that information on appraisals. And, you guys know where to find us if you want further details, have more questions, if, anything's coming up. All of our contact information will be down below. So, have a great day, great rest of your week. I am Danitza Nicklow with Berkshire Hathaway.
And I'm Jess Lyons with Lyonsgate Funding.
Have a good day. Bye-bye.
Thank you.